Good morning, everyone. Warm welcome. Absolutely delighted to be here. Uh, Real estate industry in the last one decade has seen many defining changes. From practically a seller's market to a buyer's market, a lot of consolidation happening, a lot of growth happening in multi-cities, tier 2, tier 3 cities, second generation taking in, lot of growth aspirations coming by, construction cost going up, margins getting eroded, omni-channel journey, and one very important one, technology, which was a laggard for our industry. The industry is warming up to it, and a lot of PropTech companies are acting as a true catalyst to define the growth. And the most important defining moment, which is the topic of today's panel, is shift from a legacy growth to a venture-backed transformation. So with that, I can't have a better panel, a great mix of developers and PropTech being on the panel, and we'll try and uncover this mystery of how the balance or imbalance between a legacy growth versus venture-backed transformation is going to redefine the next decade. So before we jump into the opportunities and challenges which it can throw, let me just first understand, in the next one decade, what do you think are going to be the top one or two defining changes which are going to define the industry? It can be acceleration of what is we are seeing today, which is going to get amplified, or something new can emerge. So Pavan, maybe start with you. What do you think maybe a top one or two changes in the next one decade?
Firstly, good to be a part of this whole event, and it's always exciting to see when you say PropTech in real estate, right, actually, because that is one area where I think our industry is really lagging and, not much adoption. So coming back to your point, Chaitanya, rather than what is going to change a lot in the next decade, of course, a lot is going to change. I think fundamentals are still going to be the same. If you take, for example, residential real estate, in the end, people want good homes, period. They are just looking at a easy, transparent way of doing it, which the industry has been lacking from a very long time, okay? So a lot of that has already been changing in the last decade. So in the next decade, I think these basics are definitely going to be amplified, which we are seeing now, actually, yeah. So anything around that is going to be only a support system. One thing which is really heartening to see is a lot of professionals coming into this industry now, right? I mean, traditionally this industry always has been like a legacy industry, and it has a particular image, right, of the whole industry. So that has changed quite a bit, and it's heartening to see a lot of professionals coming. I myself am a first generation entrepreneur. I don't come from any business family or real estate background to start with, right? So that is quite heartwarming, and to see that, a lot of people from the non-real estate background, although like really good professionals actually, coming and joining us as a core team to change the industry. So this is definitely going to have a amplifying effect. Of course, there's a lot, good or bad, our industry is heavily dependent on government policies, right? And it's a state subject. So there's not a lot of central government things which you can do at a central level, right? So that it will be interesting to see how that can change. Of course, Karnataka has been really on the forefront of it. There's a lot of digitization of land records which are happening here and all of that. So it'll be interesting to see how that can change, because today, fundamentally, if you go to a real estate promoter, for them, tech adoption is not the immediate problem they think about it, actually. I mean, there are a lot more problems to deal with, right, actually. So who is addressing that? I think all promoters know that, even if any startup is trying to address that part of it, it's still heavily regulated and heavily dependent on the government, right? So it'll be interesting to see how that can change. If that can change in the next 10 years, which I'm hoping it would, because a lot more young blood coming into the bureaucracy also, but that should have a lot of impact on that part. That will have a snowball effect in every part of the industry. Of course, apart from that, there's a lot of other things which people are doing for the, efficiencies and, the way dependencies are coming to our industry. So it'll be very interesting to see. So we are also quite curious to see what will happen in the next 10 years.
So your take is transparency, growth, and coming from an unorganized setup of industry, far more regulated and moving towards organized.
Yes, yeah.
So great. Arpit, what's your take? How you see it changing?
So we are a B2C construction startup, right? And right now we're doing some 700, 800 construction projects in parallel, right? Dealing with B2C customers, right? And I think talking to many of the customers, I think two things which predominantly will change is, first is, I would say, the customer expectations, right? I think there are a lot of young home construction owners, home construction customers have come into the cycle, at least what I've seen in the last 7 years. That's 7th year now, right? So that's the first thing. I think the expectations of what customers expect. I think right from the first point in the last journey, it's a 12-month journey if a house is constructed. I think every touch point they want to understand very clearly, very upfront, right? Of course, transparency is already pointed out, but how detailed you are, right? And how clear you are in your understanding about what customer wants, right? And I think we also had a conversation that personalized, how personalized you can bring that experience to the customer and in a faster way, right? A typical customer now deals with Zeptos of the world, right? And my understanding by talking to the customers is I think they have a very similar experience they wanted from irrespective. They will not understand whether you have to deal with 100 variables or 10 variables in a construction domain. But the expectation sort of is sort of very high. And I would say that that's a pretty a much better way to put it out. And why it is very important? Because I think we'll all up our game, right? And we'll not think it from a old construction lens, right? Well, our lenses would be just view this entire problem from an operations point of view, and how do we solve it at scale? I think that's how we would, that's first. And the second thing is I think a lot of technology has, I would say that it has gone more into CRM, sales, right? Very, very upfront from an acquisition point of view, right? And technology is sort of very laggard in sort of how it deals with customers. But I think it will possibly seep in up very deep into the customer experience, not just a basic experience to a superlative experience. And very, very important that it will go to an operational efficiencies. I think digital twins of the world, earlier digital twins from a 3D models point of view, Revit of the world were used for a bigger construction projects. But now we use it for a smaller project also, so that we're very, very clear that the 70 lakh project is a 70 lakh project and it's done in 12 months, right? What we have promised to the customer. So I would see that these two predominantly changes would happen.
So
right.
Customer experience, I was reading somewhere, the last best experience is the minimum experience you will expect.
Exactly.
And it's not whether I'm buying 100 rupees stuff or maybe signing the biggest check of my life. And technology, I think, great. Sumesh, what's your take?
Good afternoon, everyone. Thanks for having us here. So, today real estate is the second biggest contributor to the GDP. It's growing towards becoming a $1 trillion industry in the next 3.5 years. Despite that, the PropTech industry is way, way far off from becoming a $100 billion industry. As compared to any developed or developing country, we have seen a lot of gaps, and I personally faced it when I first approached of several investors for funding our startup. And I remember very clearly that about a year back when we had come here and we were pitching, or we were trying to pitch our product to this our investor TurboStart. Even though they had invested in more than 55, 60 startups, when we started this pitch on a PropTech, the first question was, what's the utility? How are you going to make it a part of daily life of your customers? B2B has still seen some kind of a progress over the last few years in the PropTech industry, but B2C, where you enable the transactions, you see end-to-end utility right from sourcing of a deal to the closing, and taking the customer through the entire journey of a transaction has been a challenging area. For example, every one of us has 3 to 4 apps on our phones. One is your banking app, second is your share market or maybe mutual funds or investments app. Third is a taxi cab app, and maybe a food, maybe a Zomato or Swiggy. How can we make a real estate app or a real estate platform part of your daily usage? That was the first question asked by the investor. And we finally, after months of convincing and negotiation, and fortunately, they also came on board as a strategic investor as well as an advisor, because they themselves have a tech platform. We were fortunate to finally, move towards the direction where we are trying to build a B2C app. We have seen a lot of success on the B2B side, where our high-end real estate business, which is towards the sales on developer to customer through the brokers, that platform had seen reasonable success. But when it comes to directly reaching out to the customer and handholding them through the entire journey and making every part of the ecosystem part of that app. I think that is the challenge with which we started this. And I think as the journey goes, we are working on this, and we feel that it's still a big journey for us. And I think over a period of time, the challenge for all of us here and the real success will be achieved only when we bring the utility of our systems on the B2C side, because that is what will change the entire game. Because B2B will be still played between the channel partners or the contractors or the developers. But the moment we get some success on the closing side with the customers and the real, I'm very happy to see the way Arpit and his team is delivering on the B2C side, because that is phenomenal. Managing 700 to 800 customers and meeting their requirements is phenomenal. And this is something which we are working on to ensure that the entire journey of a customer, and especially the big families who already have their family offices, and the new generation, the nouveau rich, if we are able to help them in terms of analysis of buying right from the day one when they think of buying a property till the time they end up, getting the possession of the property, and even after that, managing their properties. We want to bring everything on that platform, and that is where we see a lot of challenges in terms of acceptance and usage of the platform on every side of the business.
So PropTech and B2C is the big shift. I am sure in the next decade we'll have a few unicorn PropTech sitting here, somewhere here.
Yep.
So I think we talked about growth, we talked about transparency, we talked about technology, consolidation, regulation, and I think in all these things, growth is integral part of it, right? Now let's probably, Arpit, if you can throw some light in terms of, we are talking about venture-backed versus legacy grown. What opportunities you see that all these changes which we talked about can get accelerated? Is that the right path? Do you think this is a good option to have? What are the opportunities it poses? If you can just throw some light.
You mean opportunities with respect to VC-backed?
Yes, VC-backed.
Possibly say from my personal experience, I think it has been one of the really, really good points is sort of, they view construction is not from a construction point of view, as is from an operational point of view. I think it's a problem statement from an operational point. So everything is sort of very metrics driven, right? Right from an acquisition of the customer to the lead funnels, to lead scoring, to what you're doing pre-construction and during construction and post-construction. So there's a very clear-cut input and output metrics which are defined, right, for us. So we exactly know what metrics we have to achieve every quarter and every 1 year down the line, right? So I would say the first thing which is, to make someone transferable, right? I think first your inputs have to be very, very clear and quantifiable. If your inputs are not quantifiable, I don't think you'll be able to control your outputs very clearly and not relay those information to your customers, channel partners, contractors. We're a marketplace in a way, so, right? So we have two sides of the coin, right? So how do let's say in my case, or in Brick and Bull case, how do we make sure a contractor earns in 6 months? He was earning X amount of the money right now. How does he end up earning X.5, X into 1.5, right? And same with the customer, right? How does customer gets a very clarity on timelines, quality, the communication from the team, right? So I think so coming back, I think the first very, very important, having a VC backed, I think the entire focus goes on very, very quantifiable metrics, right? So the entire approach changes on seeing that as a problem statement from a very generic problem statement, or on a very, very, I would say very high level, possibly very clear actionables which you need to focus on. That is one. And second thing is I think there's a lot more structure which comes up, right? And I think for us it has been, we will get a lot of understanding. Like, for example, how does the Zepto would do it, or a lot of our learnings have been from Urban Company, right? Urban Company has focused a lot on the contractors or their partners' happiness. I think that's what we also learned, that if you focus in our case, right? So it's not, what does VC back does is you get a slightly a wider horizon and understand how does other startups are running, right? And they help you to connect with it, and it's a wonderful way to look at construction. It's not a very old way of looking at a construction problem statement, right? How do you look at it as a core operational problem statement, right? And doing, and that's where you look at not just making your customers happy, but you're making contractors also happy, right? If we were not VC backed, I don't think we would have looked at partners being happy, to be very honest, right? Of course, we know that customers always have to be happy, but for a marketplace like us, I mean, how do you make sure a contractor also becomes happy in this space? I mean, yeah.
I can tell you worked with a lot of developers. It's a very different mindset you're talking about. And I think what I completely agree in terms of brings a lot of structure to it, method to the entire madness. It's far more goal-oriented, if I may say so.
Yeah.
And keeping the entire ecosystem stakeholders happy. Great point. And I think I loved the point which you made. It also brings in lots of outside-in view, which is outside your industry as well. I think that's something which we see, which I think is a great value.
Yeah.
Pavan, I think, again, you are also being VC-backed, right? I think how you have seen that opportunity pre-VC and what that was probably a driving force for you to look at that. Was it capital? Was it growth? What was in your mind? And what was the journey with the VC to kind of make that happen for you?
So I think in our case, probably the motivation to go out and raise funds was pandemic. So during pandemic, it was there's a lot of shift in the thinking, right? Actually, and once you are I'll talk from a developer point of view. The moment you are backed by a fund, I think fund obviously brings in a lot of structure to start with, and if I may just jump to the end, I think a fund comes with the exit strategy in mind, right? So no fund is actually funding you just because they want to just see you grow, right? In the end, everybody has an exit strategy, right? So that exit strategy brings a lot of clarity in your thought process, because by nature, residential real estate is a self-liquidating asset to start with, right? So that is point number one. Point number two, a lot more clarity in your business process also, right? Like at White Lotus, we have always kept it asset light. We only do joint developments. We never buy land. Which the fund really liked and the family office really liked. And fundamental change, if you see from the traditional legacy developers, like the previous generation, let's say legacy developers, have been quite comfortable with holding illiquid land banks, huge land banks, right? They were quite comfortable with that, right? Because there is no exit strategy in mind. Nobody is pushing you against time to actually liquidate that asset, which has worked well for a lot of people over a period of time. But then that cannot be the case when a fund comes into play, right? I mean, fund does not say that, I'm going to give you money, just hold land and one day we'll exit, right? I mean, there's no strategy there, right? It has to be in the form of a product. In the end, it has to convert into a B2C sort of a model, right? It cannot be just a land business. So that kind of a clarity, it really brings depending on your business model. Other thing is definitely a lot more corporate governance, of course, and professionalism in terms of you being able to attract the right kind of talent also, right? The moment, because everybody comes with this notion that the moment you are a builder, developer, whatever you want to call it, you come with this image and tag, right? I mean, yeah, so it's tough to shake off that tag. So when you are at least a fund bag, you see that, a lot more talent, which is not necessarily like a real estate background. Like we have a full-fledged top-tier team right now, and 80% of them are non-real estate background. So bringing in fresh thinking and, a lot of startup thinking, and, so we are blending that speed at the same time our core knowledge of real estate also, right? So that attracting the talent has been quite a, welcoming change for us. And having said that, like I said, the exit strategy makes a lot of difference in terms of what they want to do. Some funds might come with a strategy that we want to take you IPO. Some funds might say that, we just want to back you for the next couple of years, So it has brought in a lot of clarity in terms of thinking. Ours being a very cyclical industry, of course, it's good to have the right kind of partner who understands the cyclical nature of the business. Else it becomes very tough, right? Because ours is a very cyclical business, long exit cycles. Of course, residential real estate, luckily, is a self-liquidating asset, but the moment it starts getting into commercial and all of that, the cycles are quite long, right? Again, depending on economics outside, job creation, your grade A office space absorption, there are 100 factors to consider, actually, yeah. But yeah, a lot more, I would say, a lot more clarity in terms of the objective exit strategy. And they're definitely pushing developers not to just park your money in illiquid assets. So that's been a very welcoming change, yeah.
So clarity, exit strategy, talent, I think that's great. And I think Pavan is discussing, right? You don't represent a true real estate developer, an IITian chemical engineer becoming a developer, practically no baggage, right? I think maybe I think maybe we'll take a minute more and we can throw some more light in terms of the fact that when you look at legacy, when you look at industry typically, they're all promoter driven.
Yeah.
And you rightly talked about the fact that there was a time when land was a value creation. मेरे पास land है, that's a value creation for me. The model is flipped. You talked about customer experience. We talked about delivering the projects. So that model is kind of flipped. So how you see that mindset being shifted? Because what we see today, the industry is 80 to 90% is that kind of a developer mindset today. Very few would be probably Arpit, Pavan, you are first gen young developers which probably do not have that kind of a legacy per se, if I may say. You are creating a legacy now. Yeah, Pavan. So I think maybe you can just share some thoughts in terms of how you see, I'm sure you talk to peers as well, how you see that mindset shift happening. Do you see that shift happening or not?
No, absolutely, absolutely. I mean, if you see, interestingly, that shift is happening even with the second and third generation of legacy developers also. Okay. They are also understanding that, it's not just the land bank. Of course, it's tough to debate on the math of it. But then you also have to consider that we are from the last decade, if you see, right? We all went through crazy cycle in real estate, right? We went through economic downturns, we went through demonetization and GST.
You have tasted it all.
Yeah, GST, RERA, pandemic. So with all these policy changes which happened, even the second generation is realizing that. See, right now we are probably sitting in one of the biggest bull market of real estate today, right? So it's easy to say a lot of things that,
It will remain bull market for the next few years?
That's a different topic. We can discuss about that at length, actually. But yeah. So we are currently, if you are, let's say, a legacy landowner sitting on land bank, the valuations are crazy today, right? I mean, like we say, we only do joint developments. The math is not making sense anymore to the landowner because whatever multiple they make from the joint developments, looks like the market value of the land is appreciated much more than the so-called joint development, which will give you a couple of years down the line, right? But that's generally not the case, which is exactly what is making interestingly, it's also making the second generation of legacy developers not to just think of land banking, right? Because forget about what's happening in the last couple of years, the bull market. The last 10 years, what happened? If you were sitting on crazy land bank, it did not help you in any way. Neither the valuations went up crazily, neither were you able to liquidate that, neither developers were crazily unlocking that land value in terms of assets, in terms of development. So that really did not help. And if you see even the funds which were backing, which were ready to fund developers also, they were shying away from land banking, right? They wanted an asset-light model where they know that money comes in, where your project launches are faster, rather than you having a land where, of course, your historical land value might be negligible. So that change is quite significant. I think good developers who have seen this last 10 years of cycle are not getting carried away by this, right? It's very easy to get carried away today to, again, get back into land banking. It's crazy because the valuations are going crazy every day. But then good developers who went through these cycles, actually at least one or two cycles, they know that, it's not really a very prudent strategy to base your whole business model on land banking. And case in point, your funds also are seeing that. Just because there's a lot of money available in the market today, that does not mean that funds are actually backing developers who are sitting on land banks. It's probably a byproduct if you're sitting on a land bank, but they're not really considering there is a strength to come and fund you just because.
It can be a liability rather.
Yeah, I probably won't use that word from the industry, but then, yeah. So that has changed significantly, and it's a very refreshing change. Otherwise, valuations start going crazy, and so this thinking is not just with first generation entrepreneurs or people who are just entering the industry. It is coming across.
So you're changing, you're seeing it
quite a bit actually, and I think that is the way to go, yeah.
Great. Sumesh, I think please share your experience. You are again VC backed, right? I think I'll just also want to, if you can throw some more light in terms of how do you think about the exit strategy? Because you have to balance between a short-term gain versus a long-term value creation at the end of the day. And second, if you can talk about your journey post VC, how did that change from a growth acceleration perspective? That would be helpful.
Yep.
Any numbers also, if you can throw, that would be really helpful.
Yep. So, in terms of, firstly, in terms of what has changed post the VC backing us, number one is, we could attract a lot of talent which was not, ready to come on board because they felt, the industry or, when you are doing something of a startup like this, The talent which wants to come in, they want to ensure that the next 6 months, 1 year, or at least 2 years of capital is there. So one was that we were able to get good talent on board. We could spend more on sprucing up the tech side of the business. Fortunately, we were lucky that we got a strategic partner. In terms of the timeline, we were always clear that whoever we are raising money with needs to have patient capital. This kind of a business or no business can start throwing results in 2 years, 3 years, especially the PropTech industry, which is evolving. So, in fact, my suggestion to everyone would be look for institutional capital because that brings a lot of credibility, and then the family offices just back you with eyes closed. That's what we also did because there were a lot of family offices who were coming on board initially. But we felt that we should first get an institutional capital and the family offices will then come eyes closed because the due diligence part is done, credibility part is taken care of, governance part is taken care of, and they teach you a lot of things on the governance side. So, the things that have changed for us post the VC coming in, one was, the books, even though I'm a chartered accountant and a finance graduate and an MBA, I realized that there were a lot of things which I was missing out in terms of managing my own books. Before starting up, when I was in an earlier avatar, when we were working as an employee, we were all focused on managing the cash flows or bringing the cash flow in. Now, on the other side, I have to manage cash flows on both sides. So the VC, first thing that they did was to help us in ensuring and telling us you have to take care of all your statutory payments, you need to be spot on with all your cash flow management, because in the longer term, that is where, as an entrepreneur, you start facing issues. Maybe, you are too much focused on building the tech, you are too much focused on probably you start making revenue. But where you are getting beaten down are the costs, are the statutory payments, are the approvals, taxes, and that is where you start seeing the cash flow mismanagement. So that was one. Second is being part of an institution backing you with a patient capital of 4 to 5 years is where you know that you can spend the next 2 years, 3 years on building the business, achieving a certain scale, and then looking at maybe going into a second round and giving partial exit to your first round investor, or maybe monetizing in some other way, maybe sell out, or maybe getting the company listed. So we felt that the way industry is growing and the PropTech industry, unfortunately there have been no listed entities yet. There have been Infra.market and other companies, but who are looking at getting listed, but they are not really PropTech. They are more of a marketplace for your materials and building materials. But as and when, I think in the next 2 years, 3 years, hopefully when we start seeing companies getting listed, that is where a lot of credibility and a lot of capital will start chasing the PropTech industry. So we all need to be very, very clear in terms of who we are raising the money from, and what are we really raising the money from. So these are the few learnings which I saw.
So institutional investor is a key lesson for all PropTech companies to get.
If we are lucky to have that, I think half your battle is won, because they themselves then back you towards your next phase of growth and handhold you towards how do you monetize as a promoter or as an entrepreneur.
So Arpit, if you can give, probably as a developer, I think I can see the time, I think, if you can give some view in terms of as a developer, because I told you, right, you and Pavan, I don't count you as a traditional real estate developer, but I'm sure you talk to peers. And we talked about the mindset here. What are the top 2 or 3 things which you would want developer to focus upon? Because I think we all talked about there's an enough opportunity which this can throw to accelerate growth. But obviously it brings a lot of method to the madness. So what would be your advice to some of the developers here if they want to explore a venture-backed strategy?
Okay, I think first is very important. I mean, from a developer point of view, you're promising certain things to the customer, right? How are you going to make sure that those promises are delivered on time, all right? And whatever, let's say I've told 10 things to a customer, how do I make sure first on a very basic level those 10 things are done, right? I think that's the first thing that technology is an enabler to do that, right? Second thing is, now since from a customer point of view, there's so many things to look at. There has been superlative experience in many other industries. How a developer can superlate that entire experience of the customers, right? I know VRs of the world and all of that are enablers of that point, but how do you, from every communication, every interface which you're giving it to the customer, how that's a really much better experience than what it is right now, right? Everything starts from the customer. I think it's just, I think the focus on as everything to be that at the end of the day, our CSATs are at least 4.5 or more than 4.5 out of 5, right? And that's first. And second thing is operational efficiencies. I think, how do we, because if you just look at timelines of the project, your project get delayed and eventually it will impact my profitability as a developer and my P&Ls, right? So how do I look at gross margins of the world and contribution margins, right? That cannot happen unless I go very deep into efficiencies, operational efficiencies kick in. And operational efficiencies will kick in only with tech, right? And from our point of view, when we are doing 700 projects across 5 cities, distributed construction, I would say that, right? And there was a point where a site engineer is doing 10 sites, now he's able to do 15 sites. That cannot happen without tech, right? So tech plays a very, very important role, right? So I would say the customer experience and operational efficiencies, I think, right? Because that will change your entire P&L, right? Because now your expectation of the customer changes. So how do you become more affordable without breaking down your P&L, right? I think that's very, very important.
So tech is not a choice, but it's a
course.
definite option.
Yeah, yeah.
And I think I'll still take a minute. You talked about CSAT. I've worked with so many developers. I don't think CSAT or measuring NPS has been even the norm in this industry. Some who have started, some of you are anyways aware, surprised that somewhere even post-possession the score goes negative.
Yeah.
I think if customer experience is going to hold the key and technology is going to enable, I think that's a great advice, which I think as a PropTech companies, most of you are focused in that space, is a great opportunity for us.
Right. And how do you become process driven? So process and tech, I think both will play a big role.
And I think you also talked about operational efficiency. Get more from less. I think that's again a very clear mantra.
Of course.
Sumesh, I think from a PropTech lens perspective, again, maybe final word from you in terms of how you see PropTech developer community, VC community coming together. Is that something which you see can happen and can accelerate things? Any change of mindset there? And one more thing if you want to add, do you see acceleration of adoption of tech by having VC on board?
Of course, once VCs start seeing scalability and they start, so right now when we talk to a lot of VCs, their first question is your tech just a enabler? Is it a CRM platform or a CRM software? Is it a listing platform or is it so in their mind, PropTech companies or whatever we are doing on the props, on the tech side is just acting as an enabler. The moment they start seeing transactions happening, money flowing in, end-to-end transactions, and actual, transactions and cash flow moving in through that app or through the platform, is where the VCs will be attracted. And once we see them getting attracted, that will, automatically transform to the customer side as well. They will start looking at tech as a real facilitator for their day-to-day use. That is what I feel. So the entire ecosystem, it has to be like, it is a chicken and egg story. Once we give or we are able to build things or platforms which are end user and a daily, something which matters to your daily life. For example, MyGate, an app like that, which is part of your daily life. If we are able to do something on the B2C side in a bigger way, I think that is where the VCs will really be attracted, and monetization of businesses will become very easier.
No, great. I think I completely reckon that. Pavan, I think time's up. Final words from you in terms of what advice, again, you would have for the developer community. And maybe if you can take a position to say, is VC-backed strategy the way to go for developers?
So I'll just quickly, because the time is up, I'll address both the points. One is, I think as a developer, we need to focus on the basics to start with, right? With all this noise around. People buy homes from you for a reason, right? Which is you take care of the legal title process, the liability and all of that. They want good design. They want good quality. They want your home delivered on time, period. These are the basics, that's it. Anything else you do...
Basics have not been followed many years.
I know. So if you can just focus on these basics and anything else, tech or, any of the PropTech companies or anything else you do, is only to improve any of this, right? That's it. So either it's margins or operational efficiencies or using tech for design, whatever, everything else to address this basics. So I think if you focus on this fundamental, go back to the first principles thinking and just figure out why you're doing what you're doing, the thinking gets easier. Coming to your is VC backed thing the way to go, I have a very mixed opinion on that. Firstly, in a developer community, surprisingly, we still don't have industry status from RBI to start with, right? Actually,
Absolutely.
Yeah. So we are grappling with problems which are so remote. Whether VC backed or PE backed is the way to go, I think there's a lot to be done at the grassroots level to start with, right? Even today, technically, there's absolutely no fund anywhere which is going to back a developer to actually buy land, even today.
Yeah.
It's all, I mean, the optics are different, but then it's all a mix of, your existing projects backed by that cash flows versus this. Today, there's absolutely no fund which says that, I'm going to give you money to go buy land. It's, not possible. It's not there. So, very mixed review opinion on what is the future that going to be that. There's a lot of government push which is needed on that. So, we are still not there yet from a developer's point of view. Like I said, very mixed point of view, yeah.
Thanks, Arpit, Pavan, Sumesh. I had lovely time. I'm sure we got a lot of insights. Very clearly, I see growth very clearly heard. Customer experience, operational efficiency, keep the basics right, and technology is the way to go. So thank you very much.
So well said.
Thanks, Chaitanya.
And I have to be the human buzzer, I think. Come on, guys, give a round of applause. And I'll request all of you to be on stage here. May I call Kritika Singh Rawat to give a moment of appreciation to the panelist and the moderator. So is the crowd a little harrowed by the traffic of Bengaluru? Is that true? Because I don't hear a round of applause for the audiences. Or did you not enjoy the panel? Come on, so show some energy, guys. Louder. Okay. Seems a little better. Please continue this energy flow in the room. Thank you so much. Yeah. Thank you. Can we have a group picture, please? Paparazzi. One last to go, guys. And we are done, photographers. Thank you so much.